Hi there, good morning. You've tuned into ET Now, and this is Market Cafe with me, Cheryl D'Souza. Along with me, I have Shreyansi. Very good morning to you, Shreyansi. And if you look at the picture today, it's pretty different from what we saw yesterday, given the fact that today we are actually dealing with a handover of a negative close or maybe a mixed close from the US markets.
Well, absolutely spot on, Cheryl. So, when you take a look at stock futures, though, you're not looking at much of a move coming in there, though. Because when you take a look at futures tied to the Dow Jones, you're looking at a dip coming in of about 0.2% there. S&P 500 futures down tick of about 0.2% coming in there as well. And Nasdaq 100 futures also pulled back about 0.3%. Now on Monday, of course, the Dow broke with the broader market and reached a new intraday high before pulling back. That is, still the 30 stock index did hold on to enough of its gain to cement a fresh record close as well. So that's the kind of move that we saw coming in for Dow. Now, meanwhile, a slide in tech stocks is something that we saw because there was a gain in less favored segments, the likes of energy, that signaled that investors might be rotating out of preferred segments that have been the market's key driver for the past 1 year, in fact. Now, stocks are trying to find a stable footing after a brutal start to the month as well. Investors have grown more optimistic after Federal Reserve Chair Jerome Powell's commentary coming in that the central bank's next move will be to cut benchmark interest rates. Powell, of course, did not specify when, but he did indicate that there is that plan coming in when it comes to cutting interest rates. Now, traders are unanimously also forecasting a rate cut at the central bank's September 17 to 18 policy meeting of at least 25 basis points. So that, of course, is something the market is keeping a very close eye on. So that's a kind of handover that we have from Wall Street. Now that you look at it, investors, of course, will be passing through fresh quarterly earnings from retailer Nordstrom as well after the closing bell, and that's also something important to keep an eye on. Of course, there's Nvidia that has become a key bellwether for stocks, and that is the one that saw a cut coming in of about 2%. So that was also important to note. Now, of course, when you take a look at European markets, then let's shift focus. Take a look at European markets closed in mixed territory yesterday. So whether you look at a DAX, you're looking at a cut coming in of about 0.1% coming in for DAX. When you look at France's CAC also, that is the one that bucked the trend, closed up. But regardless, you're seeing a mixed close coming in when it comes to the Europe market, Cheryl.
Absolutely, but if you look at what the commodity markets have done, the picture was pretty stark because we've been seeing the crude prices actually decline over a past couple of trading sessions, but that wasn't the picture yesterday. Yesterday, in fact, you saw the crude market see a sharp spike on an intraday trading basis, and one of the reasons why the crude market actually saw the spike was the fact that the Libya has said the output cuts. They will go ahead and cut their output as in their production as well as export, and that kind of added to the Middle East supply concerns coming in for the crude market. So on back of that, you saw a sharp spike in the crude oil prices, with the Brent crude seeing a spike about 2.8%. You had WTI crude, or for the matter of fact what we call it as NYMEX crude, seeing a jump about 3.1% or so. And not just that, you saw some sort of a trickle effect on the commodities. You saw US copper actually seeing an uptick because of the demand rebound in China. You saw gold actually see an uptick of about 0.3% on back of the elevated risk of geopolitical risk, as well as the US rate cut optimism. Talking about the dollar index, then that saw a firm move coming in, and also you had the US 10-year treasury yields that actually saw a jump about 2 basis points coming into around 3.82%. So if you're looking at the way how we are actually dealing with the global markets, the picture is pretty stark when you compare it to yesterday, be it the US market close, be it the commodity, or for the matter of fact the way how the Asia screen also is looking like at this point in time. Actually, Shreyansi, we are seeing a sea of red in Asia.
Well, absolutely, and we'll see how that pans out for us. But for now, let's take a look at the global cues coming in from the US. You do have Conference Board consumer confidence data set, and from China, of course, you do have industrial profits data. So keep an eye on those data sets. Now, of course, there's 3 companies that will be in focus on account of board mulling fundraise. So Paras Defense, Skipper, as well as Spandana Spurti will be in the spotlight on account of all of that. In terms of other corporate action, then you do have L&T Technologies analyst meet as well, and record date for Aditya Vision 1:10 stock split. So keep an eye on that counter as well. Now, it's also the record date for share buyback when it comes to 3 counters. So Technocraft Industries, KDDL as well as Suprajit Engineering will be in focus on account of that. Now, in terms of the primary market action, there's Premier Energy's IPO that opens. So keep an eye on that as well. And in terms of other events, of course, you do have SpaceX first spacewalk mission that lifts off. So that definitely, Cheryl, is going to be in focus today.
Alright, so those are the cues that you need to watch out for. But let's talk about the top headlines globally that you should watch out for very closely. And one of them being definitely what Canada has done. They follow suit, joined the United States in imposing a 100% tariff on the Chinese EV imports. Three key players have now brought Chinese EVs under the tariff purview, and that includes the European Commission as well, or the European Union as well. You have the Canadian Prime Minister also announcing a 25% tariff on Chinese steel and aluminium. Additionally, he also alluded to the China's choice to have given its unfair advantage in the global markets. Remember, you still have the Chinese officials that are likely to raise concerns about the American tariffs with Sullivan as the Beijing continues to repair its economy after the pandemic.
Alright, then moving on, as the true test of the AI momentum, Street will be closely watching AI juggernaut Nvidia's Q2 fine print, the most anticipated results of the quarter. Investors will look for signs that the AI trade will continue to dominate market conversations into the second half of the year. Remember, Nvidia is now up a whopping 163% just this year and 60% in just the last 6 months. For the quarter, the company is expected to log a 113% jump in revenue compared to the same period a year ago when they saw a revenue of $13.5 billion. The street is also expecting them to not only beat Q2 expectations but also raise their guidance when it comes to Q3 as well.
And shifting focus to China once again, where e-commerce retailer PDD Holdings plummeted on the back of disappointing second quarter earnings, falling short on the revenue estimates as well as guidance expectations. The stock has declined as much as 30% just yesterday despite an earnings beat. The investors have focused on the company's cautious outlook as the company warned of intensified pressures with respect to the revenues, this on the back of the rising competition as well as external challenges.
Meanwhile, you also have tech giant IBM that has reportedly shut down their R&D division in China, resulting in layoffs affecting over 1,000 jobs. The company joins a growing list of companies scaling back their ambitions for China as an economic downturn, as well as increased regulatory scrutiny.
Staying with the tech space, Apple has announced it will hold a press event at its headquarters in Cupertino on September 9th, where the company is expected to announce new iPhones and Apple Watch models. The launch event will be streamed on the company's website and YouTube as well. According to analysts, this year's iPhone models, which could be called iPhone 16, could include bigger screens on the high-end devices and a redesigned camera bump and a new color.
Alright, moving on then, astronauts Sunita Williams and Butch Wilmore took off for the International Space Station earlier this year and were expected to return in just a week's time. But what has delayed all of this and what has delayed the timeline impacted all of this? My colleague Vikram is standing by with an explainer.
Now, what started as an 8-day-long mission has stretched to 80 days. Unexpectedly, Sunita Williams and Butch Wilmore's journey is not ending anytime soon. They are stuck in space because of significant technical issues with Boeing Starliner spacecraft. Now, the astronauts are expected to return home next year. It's going to be in February next year. The Starliner craft, which is parked in the International Space Station, experienced serious technical problems. Boeing Starliner already had been delayed for several years because of setbacks in the spacecraft's development. It wasn't for the first time that the spacecraft made a trip to the space station, of course, but this was the first time that Starliner was crewed. So this raises concerns about its reliability for crewed missions. Now, NASA has made the announcement that Elon Musk's SpaceX is going to bring these astronauts back, and it's going to be under the Crew 9 mission. The mission, which is supposed to take 4 astronauts, is going to take 2 instead. And it's going to bring Williams and Wilmore back home. That's the plan. The unexpected long stay and this journey can lead to certain health implications. The astronauts can face what is known as bone density reduction, also possible vision-related issues, and they are at higher risk of cancer because of possible DNA damage. Another significant concern is space anemia. But what exactly is space anemia? When on Earth, gravity plays this very important role in distribution of fluids and blood in the body. But in space, the bodily fluids shift to the head and is impacted by microgravity. It impacts blood volumes and the red blood cell counts. Remember, space anemia is not fatal, but what is noteworthy over here is that the risks associated with it. Now, this prolonged stay, it can cause also some fatigue, it can cause weakness, it can cause decreased exercise capacity. And another long-term effect can be increased risks of heart disease. So overall, it raises several questions about the long-term sustainability of crewed missions in space. With the expected successful return now of Williams and Wilmore in February 2025, it's also important to ask if this is going to serve as a wake-up call for the space industry to address the technical challenges more proactively. And that's something that will be very closely watched.
All right, with that, it's time for a quick break. But when we come back, we take a look at how the Asian markets are faring, so you don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at the Asian markets then. In Asia Pacific markets largely in the red despite the Dow Jones Industrial on Wall Street reaching new highs. Traders in Asia, of course, will be also looking toward China's year-to-date industrial profits as of July. Firstly, let's take a look at Japan's Nikkei then. That one is in the red, currently down about 0.3% on your screen. South Korea's Kospi also on the back foot as we speak, currently down about 0.5% on your screens. Hang Seng as well on the back foot, and how? Because downtick of about 0.9% coming in for that one on your screens as well. Let's also take a quick look at Shanghai then. Shanghai is also on the back foot a little bit in the red. A downtick of about 0.1% coming in for that one as well. When you take a look at ASX 200 as well, also a shade of red for that one as well. Let's take a look at what that is doing. Not much of a move coming in for that, but in the red regardless. So that is what ASX 200 is doing as we speak as well. Now back home, of course, we shut shop around the 25,010 level. And currently what is being penciled in is not much of a good start. A muted start is what we're looking at as of now, and not a good handover coming in from Asia. So Cheryl, a mixed handover coming in from Wall Street, not a good handover coming in from Asia. So let's see how that pans out for us.
Absolutely need to watch out how our screen looks actually at 9:15 a.m. But for now, it looks like we are in for a muted start. But that's not the way how your day will pan out at ET now, because start 9:20 a.m. we will have Pratik Gupta, who is the CEO and co-head at Kotak Institutional Equities, to will explain to you how you can actually beat the street when it comes to your returns with the right sector allocation. While we'll talk about the order book guidelines and the outlook with the KEC International's MD and CEO. Putting the spotlight on the real estate, especially what exactly is happening when you talk about the real estate in the city of Bangalore. We will have Anuj Puri, who is the chairman of Anurag Group. Apart from that, we will have KEI Industries. Remember, this particular stock was in focus last week. The management will come out on the show and talk about the growth roadmap going ahead. But that's not all that you have. You also have Mark Faber, who's the editor and publisher of the Gloom, Boom and Doom report, to talk about the global picture at this point in time. And apart from that, you will also have the head of strategy for NCC talking about the growth roadmap for the company, and as well as talking about how the sector is looking like going ahead.
All right, well, that's a power-packed lineup for you right there. So keep on watching your channel.
Welcome back. You're watching Market Cafe on ET Now, and government has announced a unified pension scheme for employees, after which guarantees a fixed pension, this after retirement. Experts actually calling it a mix of the old and the national pension schemes. And after the centre, you also have the state of Maharashtra that's become the first state to adopt the scheme for its state employees. Let me go across to my colleague Sameer Dixit to understand this much better, to know what the UPS means for all of us. Sameer?
Big move by the central government. PM Modi-led cabinet has announced a new unified pension scheme which is going to be based on two big pillars. The first one is assured pension to the government employee and the second one is assured pension to the family members. So the couple of key highlight of the unified pension scheme includes assured pension to government employee. So if a government employee has served a minimum 25 years of service, then an assured pension of 50% will be given to the government employee, and that calculation will be based on the date of his or her retirement. So prior to the date, the last 12 months when the service is being done, and then the salary package will be calculated, and based on which 50% of pension will be given to the government employee. If the service period is of just 10 years, then an assured pension of rupees 10,000 per month will be given to the government employee. There is also an important point that an assured pension to the family members in case of any unfortunate incident with the pension holder. So in case of demise, then the 60% of pension amount will be given to the family member or the spouse. So these are a couple of key highlights. Also the inflation rate will be adjusted when it comes to the calculation of pension. So that's the new unified pension scheme that has been announced by the government. Government understand that it is going to benefit around 230,000 central government employees, and if state government adopts it, then the beneficiary number will exceed to 9 lakh numbers. So that's the big move, and government understands that this will provide economic security as well as dignity to the government employees.
All right, thanks Sameer for that update coming in. In fact, we also caught up with Madhavan Narayanan, the senior journalist, as well as Mitali Nikor, founder and economist, listening to a slice of what they had to say about this as well.
There was an urgent pressure on the BJP government as well as its own desire to keep fiscal deficit under check. Therefore, and it also wants to keep government costs low. But what it realized was that it is a very political thing. And if you see the sequence of events from Karnataka Assembly elections, the BJP lost. And in spite of having done well having the Ram Mandir and other emotive issues, it had a pretty tough scene in Rajasthan, which had a big deal about the old pension scheme. They were actually reintroducing it and making it a big issue. And then there was the Agniveer scheme for army, which again has been much criticized. Essentially, there are two things that the BJP has realized. One is that economic issues concerning government jobs are a major issue for not only voters, but also government employees who are actually the deliverers of public services for the average citizen. So it is like government employees are like the soldiers if Mr. Narendra Modi is the general.
That we have to ask ourselves is exactly what was the reason for doing something like this when we are targeting to have a smaller government, and is this move in line with having a smaller government? And why I'm saying smaller government is because at the end of the day, with digitization, right, and with bringing in more e-governance and digital public service delivery, digital public infrastructure, DPI, which has become the mainstay of providing public services to the needy, to those who require the services, even basic public services like administrative services. We are using more and more technology, right? So therefore the move of the government should be that, okay, I want to hire certain people in governance who are responsible for policy decision making. These people should be well funded and paid and incentivized to come and work in the public sector, when I also have a growing private sector which is taking a large amount of my skill base away. And therefore I feel that this decision is in line with that strategy.
All right, moving on then, India's top ministers, including Finance Minister Nirmala Sitharaman, you have the Commerce Minister Piyush Goyal, as well as the External Affairs Minister S. Jaishankar and the IT Minister, meeting the Singapore Prime Minister as well as President yesterday. The four ministers are in Singapore for the second India-Singapore Ministerial Roundtable to discuss the bilateral cooperation and much more than that. My colleague Sumit Chaturvedi is here to outline to us what is the agenda and what was likely discussed in the meeting. Sumit?
As part of second round of these bilateral discussions between Singapore and India, today Indian ministers including FMC Raymond, Commerce Minister Piyush Goyal, Minister of External Affairs Jaishankar and IT Minister Ashwini Vaishnav, they met Singapore Prime Minister and President. Discussions were around many topics, the major ones including digitization, green technology, also sourcing more parts from both sides were there. Important point here is FDI. Increasing FDI from city-state is important. Singapore, remember, has been our largest FDI investor that has come from that country in last FI, but it is dipping and that is a cause of concern. Piyush Goyal, Commerce Minister, on the sidelines earlier met other dignitaries and CEOs, including DBS Group CEO, also Temasek Holdings CEO, TVS Motor Companies officials as well. So a number of discussions took place around topics including enhancing bilateral investment and cooperation. It is necessary because both countries are close to each other and they both need each other's investment and market for growing together.
Alright, thanks Sumit for that very important roundup coming in. But it's time for a quick break. When we come back, we'll take a look at some more stocks and updates. So keep an eye on all of that and don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates. In fact, my colleague Ansh is standing by with the futures and options roundup. Ansh?
Yes, so after a long time, we are seeing some good action by FI and index future. So in previous session, they have added around 17,000 long contract. They have covered around 14,000 short contracts. So net to net, we are seeing addition of around 31,700 contract on upside, due to which the total long position, which was hovering just around 50%, has gone up to 55%, which is a positive sign. Now, if we talk about Nifty, then as you can see in the chart as well, Nifty is just around 65-70 points away from record high level and has been advancing for 8th consecutive session, and this is the longest streak seen in at least a year. Also in option front, we are seeing good call buying happening at that 25,100 and 25,200 strike price, indicating option traders are also getting bullish and they are expecting Nifty to go above these levels. If we talk about Nifty Bank, then we are seeing good positivity here as well, though we are way too far from record high level as compared to Nifty, mid cap and small cap, but we are able to cover that gap of 5th August and we have closed above that, which is also a good positive sign. So we must maintain about that gap around about that 51,000 psychological mark. If we talk about index options, then we are seeing some mild call buying happening at 51,300 strike, indicating option traders are expecting Nifty Bank to go above this level and sustain there. Lastly, let's have a quick view on few FNO stocks. So we are seeing significant long build-up happening in Steel Authority, Hindalco and NTPC, where short build-up for Zydus Life. So keep an eye on the stocks.
I definitely will do that. Thank you so much for that, Ansh, for giving us the FNO roundup. But let's talk about stocks that are making headlines and that you need to watch out for trade today. We have Ria standing by with that list. A very good morning to you, Ria.
Good morning. So let's take a look at the stocks that are going to be in focus today. First up, we have the recently listed Siegel India, which has reported its Q1 FY25 numbers. The revenue has gone up around 26% in this quarter, and the EBITDA and net profit have also seen a healthy uptick, around 66% on the EBITDA and 80% year-on-year growth on the net profit front as well. And if you look at the margins as well, the margins have come in at around 17.5% in this quarter versus 13.4% in Q1 of last year. So overall, a good set of numbers coming in there. There's also some fundraise activity happening. Firstly, Ultratech Cement has raised $500 million through a sustainability-linked financing, and GPT Infra has set the floor price for their QIP at Rs 183.83 per share. Let's move on though to Zydus Life, which has issued a clarification on the approval given to Teva for the Glasgow HD by the US FDA. Now the company says that the impact of the same has already been factored in by the company in its sales and EBITDA expectations for FY25, and further they've reaffirmed the guidance for an improvement in the EBITDA margin by around 150 basis points in FY25 compared to the margins in FY24 of about 27.5%. Plus, they've also guided for a high teen growth in the revenue as well. Let's also talk about Fusion Microfinance. So, CRISIL has revised the outlook of the company from stable to a negative rating. And lastly, we have some major tax demands coming in. So, for Piramal Enterprises, the subsidiary Piramal Capital and Housing Finance Limited has received an income tax penalty of Rs 466.30 crores, and on HUL they have received a tax demand of Rs 962.75 crores. So we're watching out for these stocks today.
Absolutely. Thanks, Riya, for that update coming in. So there you have it. That's the list of stocks that you should watch out for. But we also have a list of what the brokerages are saying. We have Varun who's standing by with that roundup. Varun, which are the ones that are making it to brokerage radar bright and early this morning then?
Okay, so let me start with ONGC because JP Morgan has come out with a report. They are maintaining their neutral stance, but they have hiked the price target from 280 to 306. Now, JP Morgan says that prospects of oil price reforms seem to be supporting ONGC prices for near term. Also, the free cash flow based valuation could still have upside if this came through. But virtually no development pipeline beyond KG to support production in the near term, and even the near term volume guidance appears at risk, and hence they have a price target of 306, although they have raised it, but it is below the current market price. Now we have a report on Tata Motors from JP Morgan. They are maintaining the overweight stance with a price target of 1250. They say that the monthly tracker for JLR indicates that July 2024 retail sales declined around 1% YOY, and China's inventory remain under control. US inventory or incentives remain stable. JLR operation could face some near-term headwinds due to supply challenges. You have BofA on Indus Tower, where they are maintaining buy with a price target of 490. They say that the business fundamentals are strong and room for multiple re-rating and potential dividend are still there. Other than this, you have CLSA on Avenue Supermart, where they are maintaining an outperform call with a price target increase from 5535 to 5650. They say that the annual report analysis indicates greater sustainability in focus that would drive the profits going ahead, and they have some cost controls which would work in the favor for the company, and they have done some land purchases which indicate that there could be some more store addition going ahead.
Thank you so much for that, Varun. So a couple of stocks you need to watch out for when it comes to the stocks that are on brokerage radar. But not just that, you have also Raymond Lifestyle, which conducted a recent plant visit, and analysts have observed that the company has set ambitious target for growth. They expect the robust retail store expansion, as well as they are seeing opportunities from what's exactly happening globally. My colleague Jinay is here to tell us all of that. Jinay, I believe the analysts have written a note post their visit to a plant visit of Raymond Lifestyle.
Well, yes, so firstly, let's look at the management commentary. Well, they are targeting a 12 to 15% revenue CAGR and a 16 to 17% EBITDA CAGR over FY24 to FY2028. Now, this will be driven, the top line will be mainly driven by apparel and garment business, which contributes about 40% to the overall revenue mix, and the high ROC textile business. Now, if we talk about the apparel, then the apparel growth will be driven by avid retail expansion by the company. They are targeting about 200 stores per annum, along with the brand refreshment and the total addressable market growth. Now, if we talk about ethnics brand, the company holds high aspirations here because they are targeting to 10 times the scale of their current size, where the current business size stands at about 100 crores. So, they are targeting to take it up to 1000 crores. And for that, they are targeting to open about 400 stores from the current 114 stores in FY 2024. Now, as per management, the wedding related EBITDA stands higher by 300 basis points when you compare to the overall EBITDA. So, analysts expect that that could be positive for Raymond Lifestyle. Also, in addition to this, another trigger stands as China Plus One strategy, and also the recent turmoil in Bangladesh which took place. Now, because of that, many international buyers are actually looking at alternative options in which this will be an opportunity presentable for India and the company as well.
Thanks, Jinay, for that update coming in. Let's move on. Let's take a look at some more news and updates then. And you do have Medi Assist that has announced that its wholly owned subsidiary, Medi Assist TPA, has signed a definitive agreement to acquire Paramount TPA. Now, the acquisition, of course, represents one of the largest TPA deals in India. When you take a look at the enterprise value, you're looking at 310 crores in terms of the enterprise value, and equity value also is estimated to exceed 400 crore rupees as well. Now, Paramount is the 5th largest TPA in terms of revenue as well as premium. The acquisition will increase Medi Assist's market share. In the group segment, the market share is likely to increase by 6% points to 36.6%. When you take a look at the health segment, then you also have the market share increasing by 4% points to 23.6%. So that's largely what the market share is shaping up to be. And Paramount TPA, for just some background, works with 30 insurers as well as 3,000 plus group customers and retail policy holders as well. Let's take a look at the valuation picture and how that is shaping up. When you take a look at the equity value, like I said, it is 400 crores, and the valuation, when you take a look at it, In terms of financial year 24 sales, you're looking at a valuation of 2.5x. When you take a look at financial year 24 price to earnings, you're looking at 39x. In terms of the valuation, let's also take a quick look at the kind of valuation that Fairfax had penciled in when it comes to Paramount. Now, this was valued at $22 million, which is about 165 crore rupees by Fairfax in 2020. So that's important to note. And the acquisition was done at a higher multiple than recent acquisitions also of Raksha as well as MedVantage. So that is the kind of picture that you have. And Paramount, for some background, of course, is 3 times the size of Raksha as well as 7 times the size of MedVantage. So no surprise there coming in terms of the acquisition being done at a higher value. Now, in terms of what analysts are penciling in, firstly, they're penciling in the deal to be EPS positive. So that's the kind of outlook that they have in terms of the EPS. In fact, financial year 26 EPS could increase by 12 to 15% is the kind of expectation that they also have. The company will be holding a conference call on August 27th. So more details are likely to emerge there. But for now, that one of the largest TPA deals in India that we just told you about, Sharon.
Yes, absolutely. Watch out for Medi Assist in trade today. But apart from Medi Assist, watch out for Realty, NBFC, as well as the insurance space as a whole, because Morgan Stanley has come out with a note on that. My colleague Sharad is here to tell us exactly what is Morgan Stanley saying in that note. Sharad, over to you.
Well, yes, as per Morgan Stanley, on real estate, the investors' interest has waned as compared to last 6 months ago, despite the outperformance coming in on a year-to-date basis. Also, they are overall remaining constructive because of the upcycles seen in the space. Now, of the stocks itself, the pre-sales outlook for DLF, Oberoi and Prestige could be slower, as they are all depending on the launches, and the majority of which are in the luxury segment. Also, the report has stated that the investors are looking at the smaller developers such as Century Textiles and Soba, which offer cheaper valuation and higher sales growth. Now, overall, the preference is for retail landlords over office, and the preferred players include Nexus and Godrej Properties. Also, for the NBFC and the insurance space, Morgan Stanley has stated that there is an increased interest coming in the non-bank lenders, as investors are looking to position themselves for the impending rate cuts which could happen. Now, interest is coming in high for the small cap lenders, especially in the affordable housing segment. And also, interest is high amongst the life insurance stock because of strong monthly premium numbers and a recent rally. Also, if you look at the preferred picks in the large cap lenders, it is Shriram Finance, and for the small cap space, it is the PNB Housing Finance. Lastly, they have stated that a large cap potential turnaround candidate for many investors could be SBI Cards.
All right, thanks, Sharad, for that roundup coming in. Let's get to the word from the wise then. Should one dig deeper for better returns into the PSU gold mine, or is it time to exercise caution on account of lofty valuations? Here are the take coming in from the likes of Rajiv Batra, Sumit Nagar, as well as Mahesh Patil then.
We have seen good amount of a profit booking already happen over the last couple of weeks, or I will say 3 weeks per se. We look at cap goods basket, power basket, defense basket, even the PSU banks basket over there. But there is still a merit to play some of the spaces where the bar of competition is not high. Pricing power is still there, and because of government phenomena of Make in India, localization, formalization of economy taking in place, that will even make PSU more efficient from here. So areas like power still have a juice over there, will still keep on doing well. There is a merit to pick and choose rather than playing this as a pure play basket trade only going from here.
Reason why we don't like PSUs, and it's not that we don't appreciate what they do. I think on the whole, they've done service to the nation, right, since their inception. But as an investment target, our biggest challenge with PSUs is twofold. One is that the governance is unclear, and number two, incentives are not best aligned with value creation. So yes, you will find pockets of time where they can do very well. Past year or so, when the government was spending heavily, was a very good time for PSUs. But it's unclear if they have all the drivers for long-term value creation.
On the PSU side, if you look at it, there I would say the power sector, for example, the utilities, okay, where especially in the power side, power generation and power transmission and distribution side, there has been clearly an uptick in terms of revision in the targets, right? What has been said earlier So that clearly opens up a better growth opportunity in that sector over the next 5-year time frame. And while the valuations are on the higher side, but in compared to the historical average, but absolute terms, they are still reasonably okay to really look at that sector. Also, in the power sector, the energy space, right? The oil and gas sector has performed well, but not really done as well because, especially the OMCs, where last quarter was kind of weaker because of the lower refining margins. But I think where the oil is now positioned and with oil prices remaining lower, I think you should see a good on the companies making good on the marketing margins. So I think the oil and gas space in that space is also looking fairly reasonably priced at this point in time.
All right, here's another global voice for you. That's the editor and publisher of the Gloom, Boom and Doom report. That's Mark Faber, who's still of the view that the precious metals will outperform equity markets on back of the global uncertainties. Apart from that, he sees a bubble in the Magnificent Seven in the United States and that the Indian investments will yield better returns than that in the United States. Listen in.
Money printing is a fact, and there is no alternative. And in this scenario where the quantity of money keeps on growing and we have excess liquidity, gold and silver and platinum and also cryptocurrencies will likely perform reasonably well. There are commodities that will perform better, like last year cocoa and this year coffee. But in general, individuals have a difficult time storing a ton of coffee. So to keep wealth and to have wealth that is relatively safe, and especially you can hide it from the government, you keep some gold and gold coins or gold bars.
Mark, you always look for bad news to find bargains. Over the years I've tracked you. I've always admired your ability to look at bad news to find good bargains. Where is bad news in the world? What is a good bargain according to Mark Faber?
Yes, I tell you, just recently, the Thai stock market has been in a bear market for about 5 years. And recently, a lot of foreigners have given up and written negative reports about Thailand and I think the stock market has bottomed out. I also happen to think that Hong Kong properties and property stocks have bottomed out.
Where do you think we have the makings of what could be called as a bubble or a trouble? Where do you think this asset class, this market, this instrument, or for that matter, this a particular financial asset is headed towards a bubble?
Well, to tell you the truth, I think everything is in a bubble. I mean, now they sold a T-shirt of a baseball player who was a famous player, Babe Ruth, for 23 or 26 million US dollar, a T-shirt.
All right, then, that was the word coming in from Mark Faber, but let's get you some more news and updates from outside the world of stocks, bulls, bears and bonds. And at least 73 people were killed in Pakistan's Balochistan province when separatist militants attacked police stations, railway lines and highways, and security forces launched retaliatory operations yesterday. It is to be noted that the assaults are the most widespread in years by ethnic militants. Moving on then, days after returning from Kyiv, PM Modi and US President Joe Biden held a telephonic conversation yesterday where the two world leaders discussed the situation of Hindus and minorities in Bangladesh, the PM's visit to Ukraine, among other topics. Now, they of course also stressed on the need for early restoration of normalcy as well as ensuring safety and security of minorities, especially Hindus in Bangladesh. Alright, then moving on, the Congress and the National Conference have reached a deal to share Jammu and Kashmir's 90 assembly seats ahead of next month's election. The NC will contest the majority of seats, 51, and the Congress will contest 32 as well. Congress announces first list of 9 candidates, fields Ghulam Ahmed Mir from Duru, Vikar Rasool Bani from Banihal as well. So that's an important update coming in right there.
Alright, a statue of the Maratha king Chhatrapati Shivaji Maharaj, which was inaugurated just a few months ago, has collapsed at the Rajkot Fort in Sindhudurg. The 35-foot statue, built at a cost of about 5 crore rupees, was unveiled by Prime Minister Narendra Modi back in December last year on Navy Day. The recent revelations have shed light on various lapses related to the statue's maintenance. The Public Works Department has notified the area coastal security officer about the rusted bolts on the statue, yet no action was taken, leading to the statue's eventual collapse. Now you have Indian Navy, which is investigating into it. IMD has issued a red alert for today in Gujarat, predicting possibility of heavy precipitations during the day. This follows significant amount of rainfall in the state yesterday that caused waterlogging in several parts and disrupted daily life. Residents and vehicles were seen wading through deep waters as traffic congestion added to their woes.
Alright, then that was your daily dose of news and updates coming in. But with that, we're completely out of time on this edition of Market Cafe on ET Now. For me, Shreyanshi Singh, Cheryl D'Souza, as well as the entire team that put this show together. Thank you so much for tuning in. You don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.